All right, let's look at crude oil. Let's look at our trade this morning. Remember, we only have two setups in the trade room. We have a number 1 and number 3. Either market's going to give us a deep retracement on these black charts over here, or it's going to give us a shallow or more of a continuation trade on our J signal or number 3 off the black charts. Well, the first thing we do is we look at trend direction, right? We got to make sure we have our trend correct. If the trend is down, which it is right here, moving averages are down, we want to sell the break retest of the LVA or low value area. We never buy low value area in a downtrend. We let it break, we let it retest, and we look for a pull-in bar, which will be over here on the 3-sim Renko chart. Now, a pull-in bar can only be off of a doji or spinning top. The spinning top is color-coded in blue. So if I look at my number 3 top here, here's blue. They're blue. Spinning tops are blue. Dojis are plus signs or crosses. So we're going to have to, when it comes within 2 ticks of this retracement, break low value area, retest low value for number 3 on the black charts. You want to make sure that you get a pull-in bar. Now, for the black charts, the first doji came up here within 2 ticks, but it never closed below it. Wicks don't count. And you want to take the highest high doji or spinning top. So they were both the same high, but then a new doji forms a high and the body of the candle didn't close below it. So you move it up to the low of that doji. Now that's your exact bar, because look how the low of the doji, the body of the candle closes below that retest, a break retest at 23. It stopped it right to the tick, my market profile again over here on price. So when you get a pull-in bar, it means that you're playing off the doji spinning top when it comes within 2 ticks of these market profile levels, maximum 3 ticks. So when you start retracing back up into a retrace, you look for the spinning top or doji, but then it's got to close below the low, the body of the candle, the highest high candle of a doji or spinning top. You don't play off these green bars or red bars, only a spinning top and doji. It's going to get you in the reversal. Those are reversal candles. So you want to look at the low of the doji, right there it was, and then the body of the candle, that's your exact bar entry. Now make sure you don't use more than a 15-tick stop. A lot of traders in the room use a 13-tick stop on these number 3s. You don't need more than a 13-tick stop on the black charts, 13 to 15, all right? So that was our exact bar entry as far as the black charts. Breakdown, moving averages are in a downtrend. There's only 2 things we can do. There's only 2 setups we're going to do all year. We did it in 2014. All year in 2015 we did it. All in 2016 we're going to do it. Same exact setup. The same setup's been working for 30 years. Same exact setup. So what we want to do if we're in a downtrend, we don't want to buy low value area, these green dots. We don't want to buy low value. We want to let it break, let it retest within 2, maximum 3 ticks. Then we want to get a pull-in bar off my 3-sim Renko. That's how we're going to trade the number 3. Now let's say we didn't break 23 here on these black charts, right? And let's say it held. That's okay. We're still in a downtrend. Then there's what's called a number 1 play. A number 1 play, the bottom left is profile over here at 43.42. I got the hedge at 43.45. So if it would have came back up there within 2 ticks and got a pull-in bar, then that would be a number 1. So number 1s are deep retracements, and number 3s are just continuations, a lower, higher, higher, low. Now, if you look on J signal by itself, J signal says this. I'm not allowed to even trade the 3-sim Renko, which is my smaller time frame. I'm not allowed to even trade off J signal unless I break through LV or HVA, and then I look for the first retracement. So if you look, my 3-sim Renko right here, if we look, the HVA is right here. There's your HVA on your own Ninja charts, and the LVA is right here, LVA. Well, here's where price broke down through low value area. Really broke low value area. So that is a setup for the 3-sim Renko. You're not allowed to trade the 3-sim Renko unless you break through profile. And then you look for the first retracement. There's my first retracement dots. And then you look for an arrow saying it's a possible Elliott wave pattern. And then the triangle will show you where there's an order imbalance. You're trying to mark the market down for your exact bar entry. So whether you took J signal or the black chart trade, either one produced a winner. The black chart trade, the pull-in bar was here. And the J signal, the entry level was the triangle. Okay? So they're pretty similar setups, but they got the same philosophy, right? They're both trying to catch a lower high. Because if you look, that's a lower high off J signal. It broke LVA, and the first retracement is a lower high. So that's different than a number 1. A number 1 is a deep retracement, right? If it came up here to 43.45, it would have been a deep retracement. Okay? And that's all we do. We look for either market to retrace a number one into these red HVA or LVAs. If they're within 10 ticks of each other, take the outer edge, make sure they come within 2 ticks, maximum 3 ticks, and then get a pulling bar off the doji spinning top. If it's J signal, very simple. The 3-sim Renko, hey, I got a break market profile. If I don't break through HVA or LVA here, if I don't break through these profiles, then I can't trade off a J signal off the 3-sim. I'm not allowed to. I can't trade in the middle of profile. It's going to get you beat up. So but you see how perfectly it worked together because J signal concluded with my black charts. That's an alternate trade because not only did I break LVA for the first time on my J signal trade in the first retracement, it's a natural short. Consequently, did the same thing over here on a break retest on my LVA. Okay? So look for number one, number three. The first thing, ask yourself, is my trend up, trend down? If you're trend down, you can't buy low value area. You got to sell the first test of high value area, which is red, or let LVA break, low value area, which is green, retest. If it's in an uptrend, I buy the first test of LVA, and I let HVA break, retest. I don't sell HVA then. All right, Gerald, go ahead and shut that off. Very, very simple defined rules in the room. Either it's a number one or number three, and that's going to happen every single day in the market, no matter what. Either it's going to be a continuation trade or it's going to be a deep retracement. It's going to one of those two trades are going to happen every single day in the market, every day. It's either going to be a number one, number three, because that's what controls the overall market. Either it's going to continue with an overall trend direction, which is a number three, or it's going to have a deeper retracement, because if it has a deep retracement, we'll catch it with the number one. Okay? No, hey, Randy, I would just keep with this number three short. I wouldn't add new positions. Keep with the number three short. Yeah, but that would be a number three right there at 42.99. Yep. It's more of a dangerous play now because the first overall wrongly positioned traders got caught right here, right? This is where they all got caught. Got caught right at the 23 level. Got caught right here. All at the 23 level. That's where they all got caught. So stops were taken out, and that's why you had that such a hard push down.